Hi everyone, welcome back to the podcast. Arun has a question which a lot of you have been asking, a lot of you have been wondering. And it's one of those questions every new investor who enters the Indian market will first see this and they'll all be astounded by it. And they'll be wondering, why is this so?
This podcast is going to be about two highest priced shares in USA and Indian market. In USA, the highest priced stock is Berkshire Hathaway, which is around $610,000. And in India, MRF is highest priced stock with price of around 1,50,000 rupees. So why is that and why these stocks are overly priced?
The main reason why MRF's price is so skewed, meaning it's so high, is because there's simply not enough stocks of MRF being freely traded. It's called limited free float. That means a significant portion of MRF shares are being held by the promoters and not freely available for trading in the open market.
So like Adani, the promoter is having more.
Yeah, so if you see MRF's shareholding pattern and the stocks which are being held, it's being held by the family. And they're not allowing it to trade as much as we want. And because the trade volumes are very small, price also sits where it sits. And for a long time, MRF face value of a share was 100 rupees. Then became 10 rupees. Yes, you can argue saying why can't they do a split and reduce the face value to 1. And even if they reduce the face value to 1, so even then you will not be able to afford it. It'll be 15,000 rupees a share. Where will you buy it at 15,000 rupees a share?
There is no value in that.
No, not a question of value. The question lies, if you see 1 year trailing price of MRF, it's just been this year where it's really gone. Yeah, it's gone up. Yeah. So if you look at the 3 years, 4 years, and you discount this year, remove 2023, and look from 2021 to 2023, the stock has not moved anywhere. Okay. Now let's look 5 years. We'll drop the last year where it went from 80,000. It's gone to 1,50,000. If you discount that year alone, and if you go before that, it's been hovering around 70 to 80,000 rupees, right? It goes up to a little bit, only close to 90, 92, then comes back down. So if you see as an investor, if I'm putting money over 5 years' time, I would like to see at least compounding growth of 10%.
10%
and then an average. Yeah. If I'm not seeing that, what's the point? And the sudden increase in MRF is being pushed up by the market. And whatever little shares are being traded, it's being traded by very few people. Because if you can see the volume of shares, if you look in 2000, the biggest volume of shares in MRF trade happened during the pandemic, right? Where you saw huge volumes happening. After the volumes dropped off, and now it's very small volumes of shares are being traded. So if you look at it in that terms, there's not any growth as an investor to look into it. Yes, it looks very nice to say, I bought MRF. I have one MRF share or I have 5 MRF share, whatever you want to say, that you have a costly share. But other than that, as an investor, what does that mean? It really doesn't hold much water. So even if you see this PE ratio, it is at high. It's at 31.4. So even if you look at terms of earnings, and you have to compare it to other tire companies, they're basically only making tires. They're not doing anything else. Right? So if you look at it, other tire companies, the basic PE ratio, like Apollo's PE ratio is at 18. JK's Tire Industries is 18. Seat is 17. Okay? And Goodyear is at 22. So these are the main things. And if you see, even it's trading 4 times the book value. And sales growth has been at 9%. So if you look at it like this, there isn't much.
So fundamentally, the company hasn't grown much. Only the stock.
No, it has grown, but the promoters are keeping everything. As an investor, you're not getting anything. Okay. So what's the fun holding this stock? Other than saying you bought MRF at maybe 10 years ago or 15 years ago, you bought it for 5,000 rupees, now it's at 1,50,000.
50,000.
Yeah. And even if you do that kind of comparison, if you were going to put 5,000 rupees 15 years ago, 20 years ago, you could have put in so many other companies and made much better returns. Video which I did a couple of days back, where I showed 30 years ago, you put 10,000 rupees. So imagine you put 20 years ago, it was trading at 2,700, 2,800.
73 times.
Yeah. Now you take any other stock, you take a Tata Motors, you take Wipro, you take Infosys.
Every stock would have given the same returns.
No, return even better. Let's say we look at a Wipro, 75 rupees, and it went all the way to 700. Now it's at 500. So this doesn't include all the bonus and splits, whatever has come. So if you look at it like that, any other company would have given you a much better return if you had put the money compared to putting it when MRF was 2,000 rupees.
Okay.
So that's my intent of what I was saying.
So one more question is, if a stock has to move, it has to have lot of retail participation for the stock to move up. If it is so much priced, then how it is moving that far?
Stock price moving is very simple. You and me can make a stock price move. Okay. Let's say you and me are the only ones trading, right? The stock price is 10 rupees right now. I say you give me 11 rupees. You say okay. You give me 11 rupees and you take the stock. Tomorrow I say I'll take it back from me for 12 rupees.
Okay.
You give it me back for 12 rupees. It's called parsing the parcel. Okay, this is the thing I feel is what's happening in Cupid. Cupid has gone to this level because there's really no reason for
stock to move that much.
Where it is right now at 125 PE, unless there is some information which I don't have eyes to. It just feels very weird. 125 PE, okay, it's crazy. Cupid. A lot of people are commenting saying, no, you do not know what you're saying. For me, as an investor, it makes no value in it putting in a company which is 125 PE. Okay. So I can raise the price like this back and forth, and push the stock price all the way up to 200, 300 by just playing pass a parcel between you and me.
Okay.
So that's why if you see Cupid, it's always hitting upper circuit and it's hitting lower circuit. It's been bouncing between the two circuits. And this is also true for a company like when we first talked about was Warren Buffett's Berkshire Hathaway. Yeah. He doesn't allow the company to freely trade, right? And he doesn't want to let it trade. And most people who buy Berkshire Hathaway will never sell it.
It will be like their family asset for them.
Correct.
So they will hold on it forever.
Yes. And he doesn't declare dividend. Okay.
In India, declaring dividend will be the happiest thing for the investors.
Correct.
But he hasn't given the dividend, but still the
he's sitting and one of the main reasons he has Class A and Class B shares is he doesn't allow much trading in Class A to happen. All the trading is happening in Warren Buffett's Class B shares, which hardly has any voting rates. So other than having a piece of Warren Buffett and having access to all the investments of Warren Buffett, the Class B share doesn't really offer you much. Because his biggest fear is if the Class A share, someone will corner in the shares of Class A. Right? Because only few shares are being traded in it. Most is held by him and Charlie and everybody else. So that few shares which are trading is pushing the price up. And you cannot buy Class A shares and take over the company and tell him he's sitting at $150 billion. Why don't you distribute some of that as dividend? He doesn't want to do that right now.
So he wants to own the full control of the company.
So he decides. If he sees an investment opportunity, he can take that $150 billion and move it into that. It is basically ways to control your company more than anything else. The same reason why MRF is held the way it is held. It's all held not only by the family, by extended family and everybody else. The company is being held. But one thing I shall tell you, which MRF share price makes good, is it is a great way to bring people to investing. Because you tell someone, you bought the share
at 2000,
2000 20 years ago when you were in college, when you're in school. Now you see each one share is one day. Imagine what all you could have done. So immediately the person will be I should invest.
So they will get more interest into investing into share markets.
Yeah, into share market, investing and growing wealth. All this is other than that doesn't offer this much. Okay. Thanks for watching the podcast, guys. I hope it was informative and useful as always. And me and Arun will see you in the next one soon. Bye.
Thank you.